Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better push yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines, and most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak to transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Corey Buchan coming in over on YouTube. Good morning. Sunny Sharma, good morning to you as well, coming in over on LinkedIn. And I do go live on YouTube. I do go live on LinkedIn and Twitter. I'm really trying to get everybody to go over to the YouTube channel. A lot of that has to do with the fact that the stream quality is significantly better over on YouTube than it is on LinkedIn and everywhere else. So I'm trying to get everybody over there, you guys. And yes, we're going to do that. Shimmy, good morning to you. Thank you for tuning in. Dylan Turner, let's go, America. It's funny you say that, because I have a Canadian that's going to be on the show here right now. And that's what we do over here. And we're going to talk about equipment financing, interest rates, all that stuff, you guys. Because, you know, this is at the end of the day, finance is such a huge part of your business, especially if you're out there looking to buy trucks, trailers, and everything else. And with that being said, I got my man, James Currier, back on the show to talk about all this stuff. So, James, what's going on, man?
What's happening, brother? Put me in, coach. I'm ready to play.
Dude, you are ready to play, man.
Always. I love being here. Thanks for having me.
No, absolutely, man. You know, what's funny is James has been on the show enough now where he was concerned about his lighting this morning. And he's like, do I have to shut this light off? What do we do? I love it, man. That's how I know you're a repeat guest, because now and then, of course, he moved into a brand new home office. So we're going to get it all dialed, baby.
I'll get there. I'll improve the lighting for next time, Jolly, and we'll get it going.
Oh, man, that's all good. Let's see here. Eric Ransom, good morning. Thanks for tuning in, man. Dylan Turner says, screw it. We're doing Team America World Police live action. Amen to that, man. That is such an underrated movie as well.
Fair.
So, dude, what's new, man? It's been a while. I'm getting more organized in the show planning and everything. My guy Christian, who does all my marketing, he's like, we have lists now of like guests when they were on, and he's got a system down. He's really making this all possible. So it's been a while since you've been on, and you know, nothing's really changed on the interest rate fronts or anything else, but like there's you know, equipment sales and everything are starting to, it seems, month over month declines is what we're seeing out there.
Well, I don't know. The sales are definitely down year over year. The production planning and scheduling is what concerns me a little bit more than the actual sales.
Okay.
There's no doubt that dealers are sitting on inventory right now. Listen, this was all expected. I'm not sure it was expected to this degree, but we knew that the changing order was coming, and that the equilibrium needed to be rebalanced. Mm-hmm. So we were, from a financial perspective and from a lending perspective, we were anticipating much of what is going on right now for the past couple of years. We knew that it couldn't stay as high as it was. We knew that it, you know, some things had to drop off. A lot of owner operators exited the market. We continue to see that today. A lot of small fleets are struggling. We've gone through, and all lenders have gone through, a lot of refinancing with their customers, primarily for cash injections. So, you know, the rebalancing is in mid-swing, and, you know, who knows what's going to happen with the production planning and current inventory levels. But what I would think is that the price has to come down in order for the inventory to be liquidated as much as possible, so that production can continue.
So why I love having you on the show is you guys are private, right? So like you guys aren't beholden to a lot of the stuff that we kind of see out there. You guys can kind of operate. Obviously, you
Correct.
guys have regulations, but like you guys operate kind of on a different trajectory than some lenders out there with that.
We are a direct independent lender, so we don't have 10,000 shareholders like a publicly traded bank would.
Yeah,
So we still have lots of people that we have to answer to,
for sure.
but operate in a different kind of mentality and risk perspective than a lot of the big $1 trillion banks.
So you were talking about debt consolidation right there. And
Mhm.
I've never owned trucks and trailers before, so this is
Oh, you should.
yeah, dude, you never know. One day, I mean, the plan is to literally be the largest transportation company in North American history. But
I know a
with
guy who can help you get there.
oh, dude, you don't worry about. I know exactly where I need to go for all of that stuff. But with what what you're talking about debt consolidation and everything, are people who were maybe they have their equipment, they've paid down their debt on their equipment. Can you refinance and pull out some of the equity that you might have in there to improve your to put a cash injection into your business? Are you having those conversations with people right now or no?
100%. We're doing it all the time right now. It's a very popular product. I would think amongst most lenders, if you've got equity built up of any kind, whether the assets are free and clear or partially encumbered, you can pull some of that equity out for project financing, a cash injection in the company. One of the things we just did for a large carrier in the Midwest was simple refinancing for unencumbered equipment, just to have cash on their balance sheet to improve their ratios. So that's a lot of what is going on right now, because the reality was when everyone did well in 21 and 22, a lot of companies sat on cash for a while, and now that interest rates have come up, equipment prices were through the roof for a little while. That cash on hand is nowhere near as plentiful as it was a couple of years ago.
So, I mean, do you have to have your equipment paid off below a certain percentage, or does it have to be fully paid off for you to be able to go in and do something like this?
Not necessarily that, and that's what I mean by equipment being unencumbered. So
Okay.
unencumbered equipment means that you don't owe anything to anyone. You own that equipment free and clear. There are no other liens on it. So a lot of what we do is look for that equipment. When you're looking for a refinancing, it's much easier to go for the unencumbered or zero lien asset. Um, if you try and do a refinancing on equipment that has current liens from other lenders, it's a little bit of a process. It's certainly something, again, we do all the time, but in order to find the equity there, it's a little bit more challenging.
So is this something like, I mean, I'm just trying to think about this here is say you have 5 trucks and 5 trailers, they're all paid off and everything. Are you working with them to is there better interest rates at this as opposed to a traditional loan? Or like a traditional equipment loan. If I was to go and buy, hypothetical example, I'm going to buy a truck right now and it's at 6%, but with this type of financing that you're talking about, is it the exact same interest rates per like the parameters behind it, or is it lower, or what does that look like?
Good question. I would say that generally and historically, you should aim for around the same interest rate on a refinancing as a regular direct asset based financing or loan on any asset. That being said, and like I tell you every time I'm on the show, the rate varies drastically between customer to customer and asset to asset. So
Yeah.
I lend in trucking, and what we've seen in the trucking space over the last 6 to 10 months is a lot of the big banks and asset based lenders have almost completely exited the market. So what you're looking at is a lot of independents like me still lending in the trucking space, but the large big banks are very fearful and cautious of the trucking space right now, just because of everything that it's gone through over the last year.
Yeah. It's because reports are starting to come out. And I know I texted you about this, so I don't need you to comment on this or anything like that. But there's been some articles here recently that are talking about this, that some of these banks are not repossessing equipment, and people have stopped making payments on them. Like, they don't want the trucks and the trailers back. So there's reports out there that there are companies that are operating without making payments on their equipment. And it's not just me coming up with this. Like, it was in a TT News article that I broke down the other week. So
I'm not familiar with that practice. As an asset-based lender, if a customer is not making payments on that, we have a fiduciary duty to make sure that that equipment gets picked up and remarketed somewhere else.
yeah.
The idea that a lender, any bank or independent, would allow a customer to not make payments and not collect that asset after X amount of time would be foreign to me. I would not imagine that scenario going on for long.
Yeah. Yeah, it's I mean, I've heard some rumblings, behind the scenes about it. And then I don't like commenting publicly about speculation. And then when it was in a TT News article, plain as day, it was put out there. I'm like, all right, fuck it. I'm gonna start talking about some of these things that I've heard. But I think, like, those are also things, like, I think at the end of the day, man, like, that just affects the people who do the right thing in business. The ones who are making payments on their debts and everything else. It affects them more than anything.
Mm-hmm. Yeah, making payments and having the right insurance and paying your drivers well and paying them correctly. As a company driver versus an owner operator, or vice versa. We do hear things from time to time in the trucking space, with some carriers trying to skirt some of the legal regulations in our industry, and eventually it catches up to them.
Yeah, no, I agree with that wholeheartedly, man. So, how, like, we're talking about, refinancing and debt consolidation and everything. Do you think, like, what's your kind of prediction? What are you guys talking about? I mean, is this something that you feel is completely market dependent on how much this is going to continue over the next 6 to 12 to 18 months?
It's always market dependent. Everything in trucking is based on load to truck ratio and how much it costs to actually run that load. So everything is based on supply and demand in our industry. And the reality is that when people stop spending money, trucks don't need to move. So in order for the loads to improve, people need to spend more money. What I have predicted, and what most people that I talk to are predicting, is a better second half than first half. Like you were saying on one of the shows late last week, we're seeing the spot rates come up. I don't imagine they're staying at 215 for very long, but if they can stay at 205 or 210, that's a heck of a lot better than 2. So
yeah,
hopefully they continue to trend in that same direction. Hopefully the spot rate goes up. Fuel prices could come down or at least remain stagnant. If interest rates come down, and I would imagine they probably will very late this year, then things will start to improve.
So, what are you guys, from, like, a market perspective of, actual improvement? What, like, is there any parameters where, like, hey, we need to see stability or rising in prices over a 30, 60, 90-day cycle? Is it, over a 6-month period? What are kind of some of those things? Because, and I'm bringing this up, man, because there might be somebody who's like, I literally have only had my loan for 30 days. I don't know if I'm going to be able to refinance this right now, or I don't know what direction to take things.
Well, typically after 30 days, you don't have any or very little equity built up in any kind of an asset. You typically don't hit an equity position for the first at least 6 to 12 months, if not longer, depending on how your loan is structured. So what I tell people is absolutely, let's sit down and take a look at it. If you think a cash injection for your business is the right move, I can help you try and get there. But every loan is different. Every customer is different. Every requirement is different for every customer. So it's very much a case by case basis, where we sit down with the customer, look at their assets, particularly the unencumbered assets that don't have any current loans or liens, and try and work with them to find what they need. But it takes sitting down and looking through financial statements and determining the cause of what is currently happening in their business and how that can be remedied, and what the actual goal is.
What would you like to see? Like on it, would it be like on an annual basis or maybe a biannual basis that people, your client, and you might already be doing this, James, but this is just coming to my head right now, like going and talking to you about this stuff, because I look at obviously the financial health of any organization, like I would say is probably the most important thing out there in business. And you need to be looking at that, right? Because it's like the amount of people who are, like making payments on credit cards and putting all this stuff out there, and they're trying to spread, they're possibly trying to spread their debt, or they're opening up another credit card in their business to put fuel on this one because they've maxed out another one and stuff like that. Are you guys working with your people, and your clients, a few times throughout the year, possibly to talk about debt consolidation and to talk about like, hey, we could do this, pull equity out of your truck, pay off all of your, your credit card debts and stuff like that?
I try and be as proactive as possible with all of my clients. And so that's an option that we present when the relationship is first developing. It's not something that I go out of my way to provide to most of our clients unless it's necessary. We are a really great asset-based lender. So if it's refinancing, that works. If it's a direct financing for new assets or used assets, that works too. We really trust our customers to run their businesses well.
Yeah.
And actually, one of my favorite customers of all time is a very large trucking company out of the Midwest. And their accountant is so proactive that they send me their financials quarterly, along with an industry update and everything that's going on in the business and the organization and all the related companies. They are really proactive with engaging us in what they'd like to see out of us. And it's a dialogue that happens every quarter, and it works really well. That to me is the ultimate end goal of every customer lender relationship. That's what it should look like. We should be talking at least quarterly, and adjusting our opportunities and projections based on the needs of the business.
Yeah. And I'm bringing up a lot of this because like these are conversations that I think about and have, because a lot of businesses out there, like you're never in a lot of those positions until you're in the position. You don't know kind of where to turn, right? Like I'm facing this right now as well, where it's like, our expenses are rising, but our revenues aren't, because we're adding to our team, and we're making, decisions to do certain things. And it's just like, shit, what do I do? Like that's probably one of the biggest things is it's like, where else can you go to find this information, right? Because like, dude, a lot of these guys, and this is, one of those things, like I think about my old man driving it like a lot of these guys can't shut their operations down to go to a conference for this stuff, right? And I know for a fact, I can't say with 100% certainty, but finances are tight for a lot of people out there, and they don't know what to do. There are a lot of people at any given time, but especially in today's day and age, that are like, I don't know how my business survives the next 30 or 60 days unless I make changes.
Pick up the phone and call your lender, call your friend, call your network, find out what they're doing. Your small circle should be your greatest resource. And people who are in the industry know what's going on. They're familiar with it. Most of us have seen this to some degree before. So pick up the phone and have the conversation. The absolute worst thing you can do, as particularly a small business owner, is try and do it alone and never get advice and think that you can do this without any conversations and advice and just try and get through it. People like me, and I'm assuming you, are always happy to have the conversation especially when it's proactive. And, I get the question all the time. Hey, listen, I don't know what the next 60 days looks like. I don't know how I'm going to make my payment next week. Can you help me with this? And the answer is always absolutely. We are 100% dedicated to helping our customers. Their success is our success, and vice versa. It's got to be a partnership. It works both ways, and the conversation needs to happen early and often when you're facing financial difficulties.
I can just, again, I can't speak for drivers out there. I can only speak for how I kind of process a lot of the situations that I'm in. And sometimes you don't know who to reach out to, right? Like sometimes your circle might be the wrong circle for this specific question. You know what I mean? And that's like what the power of what social media and a lot of this is to me, James, is my hope is that if somebody has these questions, man, they're like, hey, I heard James on this podcast. I want to reach out to James because I know that you're going to point them in the right direction. Right. And that's like my whole hope with this, because like, this is the real side of business, man. Like I talk about like this before every single show. This is the real side of freight. It's not just fucking cash and checks and buying fucking luxury cars and stuff like that.
Wouldn't that be nice?
Dude, right? People's livelihoods are on the line like I have every dollar I've ever made in my life wrapped up to make this work, and
you're not alone. Most small business owners are exactly in that position. That's not lost on us when we're having these conversations. We know that this matters to you and your family and your kids and your friends and all of your employees. That's not lost on us. We absolutely give that credit.
And that's the thing is I'm involved in an entrepreneur group, and Andy Frisella, he's got the Real AF podcast. Highly recommend everybody listens to that. But he talks about that on his show a lot. Is most people don't realize that a lot of small businesses, I'm not going to throw out percentages, are like 30 days away from being out of business every single month when it comes down to cash and being out and not being able to pay their debts and defaulting on their loans. Because, when you're building up your business, there's so much personal guarantees that are required to get financing and everything else that comes along with it, right? Because again, I'm not speaking for James here, but like what bank is going to give an unproven business massive amounts of capital without a guarantee that they're going to get a return on their money in some way, shape, or form, right? And this is a very real thing for a lot of people, even in good times. Even in good times when you're making a ton of revenue, you're still at risk of being within 30 days of being out of business until you get in a position where you own your equipment, or if you're a brokerage, you own your building, you have an actual asset that you can leverage and possibly look at it to where it's like, hey, Chris Jolly, the individual, is no longer required to be on the books for Freight Coach Enterprises, the business. It is completely separate entities now because of this, So again, man, like this is the stuff that like honestly keeps me up at night. Is thinking about a lot of this stuff. It's thinking about the financial health of a lot of people's companies out there and what we can do when most of the big banks are retracting credit. They're rescinding. They're cutting all of this stuff out there, especially for what makes up the overwhelming majority of the trucking industry, which is small businesses.
Mm-hmm. Yeah, we're seeing it all the time. We've candidly, we've gained a lot of new clients over the last year because of the small banks not lending like they were anticipating this year, and so be it. We're happy to do that. We're happy to work with them. Eventually, the big banks will all come back and drop their rates like they always do, and that's fine. This is all part of the cycle, and they have every right to do that. But my suggestion to people is always to work with people, partners are going to be around for the long haul.
Yeah, I also look at it as I only want to work with partners that want to work with me in all phases of my business. I don't want to work with somebody because all of a sudden I'm good enough for them. Like I said, dude, like I'm way too like fuck you guys. Like if I wasn't good enough for you back then, why am I good enough for you now? I want to work with James. I want to give my millions to James because he took, he was there for me when I had one truck and one trailer. Why would I want to switch that up?
Tough times make tough people. and tough people make good decisions.
Yeah. Yeah. That's the truth, man. And, James, we were going to get into some articles here, but I don't know if the last 5 minutes we're going to have time to break anything else down. But, I feel like this conversation is going to be extremely beneficial for a lot of small businesses that are out there, especially in the trucking sector, who don't know what the next, because it's like there's so many headlines that are out there like, oh, has the market recovered? Has this going on? It's like, if there is any ounce of like, say like in a year from now, we're going to be able to look back and be like, July of 2024 was when things shifted. Most small businesses are 90 to 120 days away from seeing any ounce of that on their balance sheet. And that is too long. That might not be enough time to where like that could see a significant exodus of businesses from this if they don't know how to right their financial woes right now.
Mm-hmm. Yeah, I mean, listen, I sympathize with a lot of these small businesses that are on 90 or 120 day payment turnarounds. That's, I mean, it's nearly impossible to survive, particularly when you're picking up a new contract. As a trucking company, you have to put assets on the road, start paying for those assets and the financing and the fuel and the insurance, and you're not seeing a return on that investment for 90 plus days. How do you make that happen? So yes, absolutely, that's a consideration that we put forward. All we do is trucking. This is not retail sales at your local grocery store where you see an immediate return on your investment. You put something on the shelf, somebody buys it, and you get that return back. That's not how trucking works.
Yeah. No, dude. And I think like that's as things continue to progress, throughout the overall economy, I think days to pay are going to continue to be stagnant. I don't know if any company that went from 60 to 90 is going to all of a sudden jump back up to the 60 days to pay and stuff like that. And
typically not how it works. Once a company starts going on the 90-day accounts payable return schedule, they don't like moving it back down to 60.
No, and that's the thing is I'm actually, I have my friends over at Denim who come on the show a lot. They're a factoring company, and we talk about this too, because again, I think like a lot of my focus here for, probably, I mean, forever on this show is the financial side of this business and in helping people in the beginning, middle stages of it, because not everybody makes it to become a big business. Not everybody makes it to where they have millions of dollars in their bank account and, and have the luxury of doing that. It's not that they can't get there, but the reality is it's a very, very high number of businesses that fail in the first year. It's even higher by year 5 and even higher by year 10 and stuff like that. But I truly feel like having a larger financial acumen of what you can do and what your options are out there is what's going to help people truly navigate through, the bad times. But most importantly, the focus of the conversation shifts of, hey, yeah, you're making a lot more money right now in revenue. What can we do to help you mitigate when the next downturn comes, to help soften that blow? So that's probably where, when everybody else is cheering that the market is better, James, my entire focus is to be like, all right, guys, now that the market's better, how do we prepare for when it's bad again? And that's not the fear monger, but it's like remembering where I'm at right now in business, where it's like, I got a lot to learn for when things improve, to be prepared to where I don't have to have the feelings that I have to when things, eventually downturn again.
Yeah, no more fear mongering and no more clickbait, just real conversations. And inevitably, Jolly, every time I do your show, I get 1 or 2 calls that day or the next day. And it's just pick your brain calls. Hey, listen, this is the rate I'm getting from my current lender. Do you think that's appropriate? This is the term. This is what the contract looks like. Happy to have those conversations, man. Even if I'm not getting the business and I can help a small business owner, direct them and make sure that they're not getting worked over. Listen, that's worth it.
That's what it's all about. And that's why I love having James on the show, you guys, because at the end of the day, he truly just wants to help people through these times. Because, sometimes you get into some of these relationships with lenders or insurance companies, and you don't know if it's actually good. You think it's good until you talk to other people, and then a lot of other information starts to present itself and become uncovered. But James, how does anybody reach out to you to find out more?
Always on LinkedIn, and james.currier@finloc.com. Reach out anytime.
Perfect. And as always, you guys, if you guys can't find James for some reason, hit me up. I will gladly put you guys in contact with him. We will be back tomorrow. We got another guest on tomorrow, and we're going to be talking more about finances and everything else, but it's going to be on the broker side and all of that stuff and the growth and all of that. But as always, you guys, if you guys got value in what you heard, subscribe to the show, you guys. Share it out there to your network, because if you see value, your network's going to see value as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.